Welcome back. This is Chili Davis, and I'm back to another video. I want to welcome back all my subscribers and welcome to my new viewers. This is the channel where we talk about my top stocks. Also, if you're new, please click the subscribe button to get my frequent updates. Well, today was a interesting day. Elon Musk announced that he did sell some of his shares of Tesla to make the deal to buy Twitter. So it says here he sold $4 billion worth of Tesla shares. That only covers about $21 billion. The other $22, $23 billion that he needs to buy Twitter will be borrowed in equity against some stocks and also some partnerships. So Elon Musk set to buy Twitter. He needed a little extra liquidity. So he closed the deal today and it was announced that he sold the stocks 2 days ago. Of course, he said he would never sell his shares again, but he did this time for a bigger end goal. I mean, the end goal is to acquire a social media company. He thought about creating his own social media company. What else to do better than just to buy one where you already got 80 million followers? Okay, so Elon Musk set to buy Twitter, sold $4 billion worth of Tesla shares. That's why we saw the stock price fall so much this week, but it should recover now that we know that that's what caused the stock to fall so much. Okay. All right. So in other news, Amazon was down a lot today. Amazon missed earnings and the stock fell, and it fell over 14%. Now we've been on this fall NASDAQ index has been falling for the past 6 months, over 20%. And you could have made money on that. I don't talk about doing options a lot. Options are for a very short period of time. When I say a short period of time, I mean like literally for like a day or maybe 2 days. So an option or a put is only for a day. Sometimes it could be a matter of minutes. Stock opens up at $10 and it falls to $5. That's it. That's your option. You make that $5 gap from $10 down to $5. Options can be very lucrative right now in a down market. So it's basically you're betting the stock will fall $1 or $2, and usually do them in packages of 100. So if a stock falls if a stock falls $1, then you buy 100 puts. Okay, but on this channel we don't talk a lot about short-term investing. There is one item. Had you invested when the NASDAQ was up, something called the short QQQ. Had you invested back on April 4th, you could have bought the QQQ at $31. And today, since the market crashed on April 29th, you'd be up over 45%. Okay, so that's the power of the QQQ, the short QQ. It is the inverse of the QQQ, and it's also the inverse of the NASDAQ. Okay, so as the NASDAQ goes down, the short QQ goes up. So when we saw, if you visit CNBC.com, when we saw the VIX spike today, this VIX being up so much, that was signs that the short QQQ was going to be up as well. Okay, so the short QQQ on the day was up over 13%. Now that means that everything else, like the NASDAQ, would be in the red. Okay, so there is the inverse. So that is what happened today. All the major index was down, including the NASDAQ was down over 4%, causing the VIX to spike. These VIX, this is when people are selling a lot at a time. So the VIX goes up when people are selling, and there's so much uncertainty in the market. Instead of getting 100 orders to sell shares, they're getting thousands of orders of shares. You know, I'm just giving an example. So the volatility index jumped over 11% today. So we saw the short QQ for today jump over 13%. And had you been the short QQ since April 4th, when Elon Musk announced that he was buying Twitter, you'd be up pretty much over 13%. Okay, so that's something to think about, is that, you know, when something that the stock market is based on two sides. It's based on a group of people betting that the stock will go down, and there's a group of people betting the stock will go up. Okay, so we call this the short interest. Okay, so there's a short interest, and the short interest is nothing but the reverse of the opposite. So we have what we call the QQQ, which as it goes down, like when we look at the QQQ, it's down over 13% over the last month, while the short QQ is up over 45%. So now it's very risky, but it's worth it, okay? Because when you have days where Amazon disappoints the stock market, this is what happens. You get a 13% gain in a single day. That's unheard of, okay? Now, I don't know about you, but 13% on $1,000, that's pretty good. That's $130. All right, so that is the key. When the stock market goes back up, you might want to invest in the short QQ, okay? Right now, it's already at its peak. Probably the market will calm down next week, and you'll probably see this go back to, like, you know, negative 3%, okay? But yeah, so the shorts won again today. Again, this is a put option basically on the index of NASDAQs, okay? And also, the reason why I mentioned that is because I got an email earlier from Pro Shares, and it's basically saying that the FINRA is wanting to take away the option of dozens of our popular investments deemed too complex, must pass a regulator test, specialized investment knowledge. That means you got to be a broker, demonstrate high net worth, or get special approval from a broker. So these are the type of gains you have, up 9% in the day. Uvxy, the inverse, up 14%. SPXU, the S&P index inverse, up 7.32% a day. Now, if you had $1,000 in each one of these, you'd have made $90, $140. You'd have made $70. You would have easily made a few $100s just because you're aware of these what we call inverse stocks. All right, this is inverse of the NASDAQ, the SQQ, and inverse of the S&P 500, are sponsored by Pro Shares. This company owns these stocks, these index of stocks. FINRA is a financial department, financial industry regulator authority, which generally looks at, okay, are you smart enough to manage your stocks? Okay. Like I said, I'm just mentioning that. So they sent me this email and they wanted me to post my public comment to FINRA. And basically my comment is that, you know, hey, I think I'm qualified. Okay. I think I understand the risk. Okay. So that is something that's going on right now. If you don't watch it, people will take away your rights and your privileges because you don't understand the consequences of saying no or saying, oh, I'll read that later. Okay. Anyway, safe place to be is Apple, of course. During these times, Apple is still a strong and safe investment. That was CNBC. Today's top stocks was the SQQ, up 7%. The UVXY was up 2%. And the S&P inverse was up 6%. If we go and look through the portfolio, the rest of it was all available to go shopping. You could have bought a bunch of stuff today, but you pretty much didn't see a lot of green. Like I said, Amazon falling over 14% basically just sent the market in a downspin. Okay, the market went down due to Amazon saying that they were going to cut back orders. And this is nothing more than a bubble being burst. So basically during the pandemic, Amazon blew up. They acquired more space than logistics and trucks that they needed during the pandemic. And now that the pandemic is gone, they basically overspent, they're saying. Now they don't know for right now, they're saying they overspent, but due to that forecast of saying they got too much extra capacity in their earnings call, it really sent the stock market down, and really negative sentiment right now on the stock market. We've had two major companies, Amazon and Netflix, two tech companies report negative things in the earnings call. Okay, so that was the key today. Amazon missing earnings and also forecasting too much capacity. Okay, and the CEO's only been in place now for 4 months. Well, almost 5 months. The CEO just took over Jeff Bezos. So again, Amazon's the shock of the day, down over 14%, and it basically took down the whole rest of the market. Amazon down 14% on the day. That's a lot. That's extreme. Not if it was down 3%, that's one thing, but it was down 14%. Okay, so that was the key today. Amazon. Okay, also another article here saying Amazon will close 6 Whole Food stores in 4 states. Okay, that goes back to what I was saying, that extra capacity that they have that they don't need. They got to start selling stuff. Okay. It says here's why analysts are lowering price targets on Amazon after Q1 earnings. Okay. So it says Amazon reported mixed earnings. Okay. Again, when you're building a business, sometimes you have to spend more than you would like to, but you're preparing yourself in case you have larger orders than expected. So now that the pandemic's over, even the Fed got caught. The Federal Reserve had interest rates low too long, right? So during the Trump era, interest rates were down too long. It was there to help spur business, to keep business moving, to keep people buying houses. Now that they're trying to deflate that bubble, everybody is taking a hit. Okay, so including Amazon. Amazon was up last year. Let's see. Let's look at it. Well, doesn't end. Okay, but Amazon back in 2020 was up around $3,200, and now it's repriced at about $2,000. So again, Amazon trying to come down. They got too much capacity, and so that drug the market down. Let's take a quick look at my other portfolio. Now close. Again, this other portfolio was down over 2%, over $1,100. And let's take a look at the top stocks of the day. Again, the short interest QQQ was up over 12%. The Uvxy was up over 11%. And OLN Corporation, one of the oldest companies in the United States, Olin Corporation, they deal with ammunition. They were up 7.77%. And then I think that was it. There was nothing else to talk about in the day. I mean, pretty much that was it. I'll take a quick look at this daily cash gainers, but it was nothing to write home about. Okay, so the top cash gainer was the SQQ, $5, and the Uvxy right behind it for $1. So yeah, pretty tough day in the market. Again, we do know Tesla was down. Again, Tesla, I think was, let's see where Tesla, down around 900 or so. Let's see. Maybe it wasn't as down as much as I thought it was. Okay, so Tesla today was trading at $878. That's a bargain. Like I said, this is a $1,000 or even $1,100 stock trading below 1,000 at $878. And guess what, guys? The NASDAQ may go lower. Okay, that just like with the Netflix going down for like 2 weeks, dragging down the market, Amazon going down, that may drag the tech stocks even further down for the next 2 weeks. So just get ready. Also, the Fed will be speaking on Wednesday or Thursday, and they're going to be talking about raising interest rates. So we got a lot of stuff on deck. The only thing I can say is you might want to sell some of your stuff now, or you might want to just wait it out. But right now, the stock market is sort of in a free fall. Those two negative events, Netflix going down and Amazon going down, could mean the market's going to go down for quite a while, and also possibly a recession coming. Okay. We don't know for sure, but it could happen. So that's the sentiment today. Amazon was down over 14% on the day, causing all the tech stocks to fall. But we did see the volatility index go up, causing the short interest, the short QQ to be up over 12%, and the Uvxy be up 11%, and the SBS up 10%. So that was the market for Friday, the last day of April. I want to thank you for watching. Thank you for listening. Please like, share, and don't forget to get your free stock on my Robinhood link below. Have a great weekend.